And so the price of silver has got to go up. I mean, there's nothing guaranteed in life, but to me, this is about as close as you're going to get. Silver prices are going to go up. Right? I mean, silver was $50 in 1980. I mean, how many things could you buy today for less than they cost in 1980? I mean, other than electronics, right? Like a television or something. But a commodity? I mean, silver is a bargain. And, you got to buy it. I mean, I've been talking about it for years. And, I remember when silver was under $5, under $4, when the century started. So it's been going up, but it was so cheap, in 2000, 2001 with $4 or $5. Gold was under $300 an ounce. Gold has gone up more than 10x so far this century. It's almost not quite 10, but nine times. The Dow is only up a little over 4 times. The Dow was about 10,000. Now it's a little over 40,000. So in terms of gold, the Dow has actually gone down. But it's still, I think, expensive relative to gold if you take a broader historic look at it. So the stock market is expensive. What's also cheap is oil. Oil prices are very cheap. You can get almost 40 barrels of oil for an ounce of gold. That is historically cheap. That means that oil prices are not going to stay at this level. They are going up. And that is bad news for the CPI because it's going to weigh heavily into headline CPI. But all this, I think, is going to occur against the backdrop of a U.S. recession, which means real interest rates plunge even more than nominal rates. We go back to quantitative easing, and that's going to send gold and silver to new highs. It says that for silver to hit new highs, it's a much bigger move. That's why, people should be buying it. We sell physical silver at Schiff Gold. So you can go to schiffgold.com and load up on silver. In fact, we now have a new e-commerce platform on the Schiff Gold website. You can just go there, look at the silver products that we recommend, buy them, put them in your cart, check out, and then you just got to pay and we'll ship it out to you. Yeah, I think it's really, really cheap. I mean, I own a lot of gold mining stocks myself. It's by far my biggest sector that I have in my personal portfolio. And I added, considerably to that position earlier this year, back in February, March, when gold was still close to 2,000 but above, and Barrick and Newmont were hitting multi-year lows based on downgrades by Wall Street. I hadn't anticipated buying more, but I don't look a gift horse in the mouth. And so I took what the market was giving me. But, I think that these stocks are historically cheap. The sentiment is historically negative. I love being a contrarian. Normally, how do you buy gold stocks when gold's at an all-time high and be a contrarian? Well, you can, because nobody expects gold to stay at an all-time high. People expect it to go down. And, for many, many years, the gold mining stocks were the ironic victims of inflation. And people just assume that that's the new normal. And why they were victims of inflation is inflation drove up the cost of mining. But the price of gold didn't go up as much as the cost of mining it. And that was because people didn't realize that inflation was actually as bad as it was. And so that hurt gold mining profits. Even though, yes, we can sell our gold for more money, it's costing us even more to get it out of the ground. Well, I think now that gold has finally broken out of this consolidation that it's been in since 2011, I think that gold is going to outpace the cost of mining it. Especially now, like I said, oil has never been this cheap priced in gold. That's great for the gold mining companies because that's a major input. Also, their wages, the dollar has been relatively firm, and so the wages are low compared to where they would normally be with a big gold rise. Normally, the dollar is falling against a lot of these currencies where the wages are denominated, but that hasn't happened. So I think these companies are in great position. They've also cleaned up their balance sheets over the years. paid off debt. They're generating tons of cash right now. The big companies trading at ridiculous valuations relative to what's historically been the case. I think there's going to be a major consolidation in the industry. I think a lot of the smaller companies are going to end up getting bought up by the bigger companies because they're not going to have much to do with all the cash. It's going to be a lot cheaper than, funding exploration projects. Just buy up some of these super cheap companies, and get a sure thing instead of gamble. But, the fact that we've had so little investment over the years in exploration and development means that when the gold price is 3,000, 4,000, 5,000 higher, you're not going to see a lot of new gold coming to the market to take advantage of those higher prices because the industry just doesn't have the ability to produce it. It's going to take time to bring a lot of these mothballed mines back into production, and it's going to take even longer to find more gold. So we're not going to see a big increase in supply. We'll see some, but nowhere near the increase that we're going to see in demand. Yeah, of course. I mean, where does inflation come from? It comes from the Federal Reserve monetizing government debt. Well, government deficits have never been this large, and so we're going to have more inflation than ever before. It's just a question of when does the Fed go back to QE, and I think it happens early next year. The rate cuts are just the beginning. The QE is the next part because the Fed wants to get long-term interest rates back down. It wants to help the housing market. Well, just cutting short rates isn't going to do that. In fact, long-term rates are likely to rise despite these rate cuts because they are inflationary, and the Fed does not control the long end of the curve, which has to price in the higher inflation that results from the easier monetary policy. So I think at some point, the Fed is going to go back to QE in order to artificially suppress the longer end of the curve because it can print money and buy those bonds to push down the yield. But that's just even more inflation. And so it's coming, and again, the politicians are not leveling with the public. They're saying we don't have to have any cuts to government spending. We can get all the Social Security we were promised. In fact, we can get more. Donald Trump says, hey, we're not even going to tax your Social Security benefits. So we're going to get more Social Security benefits. We're going to have lower taxes. Well, that means we're going to have higher inflation because we have to pay for government somehow. And it's clear the only way politicians are willing to charge us for government is through inflation because then they can blame it on somebody else. They don't have to accept the responsibility because they didn't physically take our money. They just took our purchasing power by creating money, and now they can blame it on, greedy businessmen or Putin or speculators or whoever is the scapegoat of choice, but they won't accept responsibility. So we're going to have a lot more inflation. I do think that the Fed's rate cut cycle is going to get aborted before they get back down to zero. I mean, I don't know that they'll make it all the way back down because I think that the foreign exchange markets may not cooperate, and we could go into a free fall with the dollar. Inflation can really start to get out of control. And so the Fed may have to start hiking rates in order to stop it. Well, I've been recommending the emerging markets, and this has been a hell of a week. Last week, we finally have seen a big move. We've been overweight a lot of these Chinese names, and there's a lot of value in the emerging markets. And I think, the markets are now just starting to recognize that. This new stimulus out of China was a catalyst to kind of wake up a sleeping giant here. I don't think the stimulus is a good thing, but it's just that the market was so cheap that, it was just looking for a reason to go up because everybody had left it for dead, particularly the Chinese names. But I like emerging markets. I like businesses that will benefit from a weakening dollar, and emerging markets will thrive in a weak dollar environment. They're hurt by a strong dollar because they have a lot of dollar debt. So you have a lot of emerging market companies that owe dollars. And as the dollar goes up, it makes repaying that debt more difficult. But as the dollar goes down, it's like large amounts of debt are just forgiven. They're wiped out. So I think that's going to be a good environment for those economies. It's going to keep their prices lower on a relative basis. And so I want to be in those stocks. I also, I want to be in other resource-related names, energy, agriculture, companies that do well with inflation. Defensive stocks, companies that produce products that people have to buy. Even if the price goes up, they'll keep buying them. Like we have, tobacco stocks as an example. I mean, people, if the price of cigarettes goes up, you're not going to quit smoking. I mean, you should quit smoking, but the people that haven't quit yet, they're not going to quit. They're going to keep on smoking. And if the price of cigarettes goes up, well, they'll just have to cut back on something else. But they'll keep, So, we own those companies. And, we own a lot of companies, food and beverage type companies, pharmaceutical companies. Look, people are sick. They're going to take drugs. The government's going to fund this. So, you're going to cut back on other things. So you want to have portfolios of goods and services that people are going to need. They're going to buy. Even if they buy less, they're going to buy. And, companies that are not expensive on a PE basis, that pay good dividends based on actual income. Not, pie in the sky companies that, well, we're going to make money in 10 or 20 years if all these great things happen. Well, if the mainstream media says it's fact, it's probably fiction. They generally get it wrong. So if the mainstream media is very critical of China and says China's finished, China's a disaster, you probably want to invest in China. It's when they're talking about how great the U.S. economy is, everything is perfect, it's the best of all worlds, it's Goldilocks. It's because, the U.S. is in a lot of trouble and they just don't recognize it. And U.S. stocks are overpriced and they don't know that either. So you generally want to fade the mainstream media, but you do need to have a long-term time horizon because it may take a while for the media to be proven wrong.